Merry Christmas, everybody! In this video, I'm going to talk about the 4 things you need to do before the end of the year as an investor. So these are 4 very useful tips to help you save on taxes, find new opportunities, and also plan for the future, whether you have kids or grandchildren as well. So the first tip is to review your portfolio. Now what you want is to obviously calculate your gain and losses from all of your investing accounts, but it's especially important to calculate your gain and losses for your non-registered accounts because that's where you get tax impacts. Now, if you have a business account, you should also calculate the gain and losses from there as well, so you can provide that to your accountants later on. At this point, you can generate most of the statements other than the December one, and then you can send it to your accountant. Silly me. And what you want is to separate your short-term accounts versus the long-term accounts because it has separate tax treatment. If you have an account dedicated to short-term trading, it's going to be counted as short-term capital gain, and it's going to get taxed differently than long-term capital gain, which belongs to a long-term account. And for myself, I have separate accounts for them, so then at the end of the year, it's easy to calculate my taxes. If you haven't done it this year, make sure you set it up so you can have this kind of system in place for next year. Tip number 2, tax loss harvesting. Now, in the previous step, I told you to calculate the gains and losses you have in a non-registered account because it is important if you plan to do tax loss harvesting to basically reduce the amount of taxes you pay. I actually have a separate video on tax loss harvesting, and you can refer to it in my channel. Basically, you look through your portfolio for any losses you can use to net off the gains. And this requires you to know what the gain is, right? So if your gain is $10,000 this year and you have some bad stocks in your portfolio, take it so they can net it off against the losses. And the deadline is December 27th, 2023 this year. And usually when you are placing a trade, there is like a time lag called T+2. So that's why you need to exit a couple days before the end of the year. So don't try to do it on the very last day. Do it like a week early if possible. Now, if you want to stay in the market, then invest in the index fund of the same sector. So for example, you exit a bad tech stock. You put that money in an index fund like QQQ for technology. If you don't know an index fund that is in the same sector, you can just do so by Googling. Then just put it in S&P 500. Now, if you want to hold cash and wait for a discount, that's fine too. When I exited earlier in December, I have a portion in which I'm holding cash, and I also have a portion that I just put into S&P 500 and just park it until I see the next opportunity. Now, the key to tax loss harvesting is that you don't invest in the same stock again for 31 days, or else it becomes something called a wash sale, and you can refer to that YouTube video on tax loss harvesting on what it means. And basically, the government will nullify that loss, so you can't recognize that. Ideally, you can take enough losses such that your gains will be close to zero, so you don't need to pay taxes. Tip number 3. You can make any last-minute retirement account contributions if you want to. Now, for Canadians, the deadline for RRSP is February 29th, 2024, so it's actually next year, February, so you get 2 months. And for IRA, which is the US friends, is April 15th, 2024. So you technically do have a lot of time, but I think now is really the time to enter your income into an income calculator, calculate how much you can contribute such that you can reduce tax as much as possible, and do it in December. Don't wait till February or April. Just do it now if you can, so you can get that out of the way. Tip number 4. Reflect and set a goal for 2024. When it comes to goal setting and investing, just because you set a goal, it doesn't usually mean you will reach it because it depends on the market and you don't control the market, but you should still set a goal. I'm a firm believer of law of attraction, and if you set a goal, even though it might take more time, you'll eventually get there. So my goal for 2024 is to start a hedge fund. And the hedge fund is aimed to provide investors with 24% a year. So that's my goal. And another goal I have is for my kids. And I put aside $10,000 every year to invest in my index fund strategy for 5 years for my kids. And based on my calculation, if you do this for 5 years, you will have enough for tuition, housing, with some leftover, hopefully, when the kids are ready to go to college. And right now, I'm at year 3 of this plan. So I have already put aside $20,000 in the last 2 years, and next year I'm going to put aside another $10,000, which is year 3, and in year 4 another 10,000, and year 5 another 10,000. So by the end of the 5th year, I stop. It's fully invested, and I leave it alone for 15 years. And then at the end of that, when my kids in this case are ready to go to college, it will pay for university, tuition, dormitory, food, and if there's any leftover, they can use it to start a business, or they can use it to invest. They can use it to do whatever they want. So that is really the goal here. So right now I'm at year 3 of my plan. So here I also have 2 sample goals for you. So the first one might be a certain amount you want to save a month. Saving $1,000 a month to contribute towards your retirement portfolio. Now, if you want to make this a no-brainer, just set it as a recurring transaction and open another bank account and just put it in there. Or you can open a brokerage account, set a recurring transaction, and then just get it to invest in S&P 500 until you figure out an investing strategy, which I think is totally fine as well. Another goal is learn how to master one passive income strategy, just one. You don't need to make it too complicated, and I do have free resources on that as well in my free community. For example, if you use my passive income strategy on Microsoft or Apple, then you can probably get $1,000 a month on it. So that would be an example of a goal that you can have. A 5th tip, bonus tip, work out what will be the major sectors that will rally next year. So this is a more forward-looking tip, and out of all 5 tips, this is probably the most difficult one, and this is where I spend majority of the time analyzing an investing accelerator, is that what will continue to go up in 2024, where are the opportunities, and so on. So if you look at tip 1, 2, 3, and 4, you can do these immediately today. If you finish watching this video, you can execute this today. For tax loss harvesting, you can probably do it after Christmas on the 27th or before on Boxing Day. The bonus tip here, this requires some time and effort. And during the weekly group coaching call for Investing Accelerator, we look at news, macroeconomic data like inflation. We look at how the company's financials are doing, what are their sector forecasts, to figure out what sectors will rally next year, which sector will benefit the most in 2024. And you don't need to get everything right. Like, you're not trying to have complete control over the economy, but if you just have 1 to 2 insights, that's where you can make a lot of money. So I'll give you a couple of hints on the things we analyze in Investing Accelerator. So the first one is interest rates will decrease. Now, this seems like a no-brainer, and everyone knows that, right? All the banks right now have shifted from interest rate forecast increase to now interest rate has peaked. When will the Fed cut interest rates? 100% for sure that interest rates are going down next year. So it's just a matter of when. And I can tell you approximately it's going to be late spring and early summer is when interest rate will start cutting. So now you notice for sure this is happening. So then you work forward which sector will benefit. For example, companies that will benefit from a low interest rate environment might be technology, which is actually one of the sectors we look carefully at. And you can also look at new technology trends that you want to be part of. Now, the risk when it comes to investing in new technology is really the loss-making period of the company where the stock price is very volatile. So for example, when you're looking at 3D printing and this up and coming technology, like 5-10 years ago, these companies initially are losing money. So you can invest in them, but you need to make sure A, you're getting a good price, and B, there is enough momentum such that you are making a profit quickly. So you're not trying to ride through the entire dip, because that usually takes a while and most people don't have the patience for that. So you need to look at the mature bottom. That's something we really focus on in Investing Accelerator. So then you can turn a profit ASAP. This might require a little bit of investing experience, but that's where it would take a little bit of time for you to learn a good strategy where you can get close to a mature bottom as much as possible. So then once you invest, you turn a profit quickly instead of waiting through the dip for too long. So let me give you an example. So last year, Bitcoin was at a low. And I guess if you have been paying attention to the news, I think the lowest was around 18,000. And my prediction during that time was that Bitcoin will be around 40,000 to 50,000 the end of this year. So right now it's December 22nd and it's 43,660. See, I didn't try to predict every single coin out there in existence. I just predict Bitcoin because it is the highest probability and the most likely that you will make a profit. So this is an example of working out one successful prediction. And you can go back and check my YouTube channel for that video. And right now, I'm still basically 100% Bitcoin for my crypto related portfolio. And I entered at around 21,000 to 22,000. And right now is 43,000. Based on my forecast, it will continue to go up for 2024, especially the Bitcoin ETF is coming. So you want to do this, except for stocks. And you can do this for Microsoft, Apple, Google, Amazon, or whatnot. But what's important is that you need to think ahead. And as long as you can think ahead by approximately 6 to 12 months, then your investing strategy should be good enough. So that's basically the 4 tips plus 1 bonus related to investing that you should do before the end of the year. So if you have any additional tips, feel free to leave a comment below. I would love to hear that from you. And if you're interested in learning my investing strategy for 2024, you can click on the link in the description to watch the free webinar as well. For 2024, my goal is to take on another 100 to 200 students for Investing Accelerator and also starting my hedge fund. So if you want to be part of that 100 to 200 students for 2024, then you can watch the free training down below and schedule a call with my teammate, Michael. He handles all the calls now, and he can answer any questions you have. And I'll also review your application, and I'll give you some comments on your portfolio as well during the call. So the call is free, so it's very valuable. And Merry Christmas, Happy New Year, and I hope 2024 will be a good year for investing as well. Bye-bye.